The Trade with Travis session, a live Forex trading analysis session. If you have any questions, once again, please make sure that you end up asking your questions and send them over so we can be able to answer those questions as we go through and being able to take a look at the charts and being able to go from there. I'm going to show myself on the screen in a quick second. Just want to make sure that everything is working on my end so everyone can be able to see. But let's go ahead and get started with the disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that Forex involves risk. It involves risk of being able to make money. It also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you'll end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well. Let me get into the middle of the screen. You see that I'm sweating a little bit. I actually end up getting done with this would be my 4th consecutive workout. And I'm happy about that. Third consecutive P90X3 workout. So trying to get back in shape, trying to get back into that. You look at my Facebook page, you'll see some of my journey. Every time that I start working out, one of my sons always hops in or finds a way to be able to come downstairs and be able to do something. Now we were doing MMA X or MMX3 today, which is basically MMA and a little bit of cardio and a few other things like that. And as soon as I started doing some sprawls and kicks and everything else like that, Mason comes downstairs and he starts doing the same thing. So I guess I always love being able to get him and everybody else and kind of involved when it comes down to that. But it was kind of cool to see him do that with the grunts and everything else like that, even though I look god awful getting it done. But hope everybody's doing very well. Let's go ahead and I think I have everything somewhat set up to my liking and being able to get this done. And that will be the last part right there. There we go. Make sure to move this over to half of the screen, and then after that we can move this over to the other half. And there we go. Okay, cool. All right, so let's go ahead and get to it. If we open up the charts and take a look at everything, we're going to start off with the economic calendar today. Remember, this week has been kind of slow, but overall, this is what we have today. We're going to have Consumer Price Index and Bank of Canada's Lane going to end up speaking. Governor Bailey's going to end up speaking a little bit later on today. Fed Chair Powell is going to end up speaking a little bit later on today. Remember, anytime that Jerome Powell ends up speaking, typically the market ends up moving. That's going to end up happening at 1900 hours. They didn't say what he was going to talk about, so I know he will talk, but they haven't said what he's going to end up talking about. So now I keep my eyes out on that and be able to go from there. Maybe that might be the reason why the U.S. dollar kind of ends up taking a pretty good spike against the New Zealand dollar and Australian dollar a little bit earlier this morning. We'll talk about that in a second as well. But if we go through and take a look at the U.S. dollar index, that's the first pair, like we typically do, just to kind of get an idea about what's going on. What we can end up seeing is this: from a daily perspective. Market was in the sell zone. From the market being in the sell zone, the market started to take a little bit of a dive. Since then, the market kind of recovered yesterday, but it has not hit this overall support level. We talked about this overall support resistance area, and we talked about long term. If we think that we think that the market is probably going to end up falling down to 11,550. If that's going to end up being the case, and the market goes down to 11,550, then that means that the U.S. dollar should remain to be weak. At this particular portion, the market has not broken a counter trend line break to the upside, and it has not failed to support. So I do expect that the market is going to continue to fall down, even though we had a little bit of a bullish day or a bullish morning going into the first portion of trading at 2 o'clock. So with that being said, I'm gonna assume that the U.S. dollar is still going to end up being somewhat weak. Now, let's see how that kind of affects gold from this standpoint, and then after that, I can kind of make a little bit more of a better decision. We take a look at what's happening with gold. We can see that gold basically ended up bouncing back from hitting the lows at 1802 to push all the way back up to 1839. The highs have been all the way up to 1840, but right now we're still making lower. It looks like we're making just a higher low at this particular point. The question is, Are we going to end up breaking out? Are we going to start to continue to move up and stay away from this overall zone, or is this market going to continue to be bearish overall? But we end up overcoming that large move to the overall downside. And I think that was because of stimulus talks and everything else like that. We can get rid of that consolidation. We can get rid of these points right here. And we can get rid of that point right there. We can go back to this overall zone of where the market could go, because that was the previous zone that the market was in. So if I'm looking at what I end up seeing based off of the US dollar index, and basing that based off of all the news that we've been talking about with the US dollar index and everything else like that, the next area that the market will end up moving up to will be 1858. It seems like the market has found a little bit of support, so that means I'm going to go to the 2-hour and kind of pay attention to what's happening with that. I see a counter trend line break that has happened in the buy zone, and the market is starting to move up, even though the market is at 50%. With the market being at 50%, kind of makes it kind of hard to be able to take this trade. If you would have took this trade maybe about 5 hours ago, actually that was at 1900 hours, then it probably would have been a better trade to be able to take. But the market has only done move 5 points since then. If the market falls back down, this would be my thought process. If the market falls back down and goes back into this zone and then use this as another support, then after that I'll look at being able to get into it. If the 15-minute, same deal with the 15-minute. The 15-minute shows some convincing type of move, in which it hasn't shown as of yet, then that'll be another thing that I'll be kind of interested in being able to pay attention to on what's going to happen with this overall move. But right now, both of those have not happened, so I'm going to stay away. And we'll go to take a look at what's happening with oil. Remember, oil, from an overall standpoint, we're thinking that's going to go to $65 to $67 a barrel. Ooh, excuse me. We look at this from a daily position. The market has moved up about 1, 2, 3, 4, 5, 6, 7, 8 days of overall bullish movement since then. And since the market ended up hitting that 52 last week when we were talking about it, it's clearly in the sell zone. It doesn't mean that it's just going to turn around, but it is clearly in the sell zone. We should be looking for the market to fall down at some point. The next thing will end up being, okay, what's going to end up happening with this overall pair? Are we going to end up getting a break, and then after that a little bit of a retracement? If we do, then after that I'll be interested in being able to trade it. Until then, I'm still going to stay away from it. I'm not going to chase a high price at this particular point. And I'm not going to sell it because I believe that the market is bullish. Okay, so it brings us back to our open pairs. And the open pair that we end up getting into right before we left out was New Zealand dollar, United States dollar. Now, let's talk about the reasons why we end up getting into this overall pair. We go back to our Forex screen and be able to take a look at what ended up happening. What we end up noticing was the New Zealand dollar, United States dollar was almost at 20 when it came down to the ADX. Matter of fact, it was at 20 on the ADX yesterday. The stochastic was right around 50. The stochastic slow was right around 55. The market has moved up to 66, but we haven't had that much movement when it came down to the upside. We see the same thing that ended up happening with the Euro United States dollar, but you can see the Euro United States dollar actually went to 18 for its overall movement. So what does that mean? That means that the US dollar actually ended up gaining strength in the New Zealand, and people start getting off of the New Zealand dollar for the overall movement, for the overall pair, which means that people end up just taking their money out of the New Zealand dollar and not believing that market was going to end up taking a push up to the upside at this particular point. Okay, it doesn't necessarily mean that they're going to stop buying it. It just means that people are off of it right now. So if we take a look at a couple pairs to be able to pay attention to, we could kind of take a look at the U.S. Swiss franc. We see that the U.S. Swiss franc is at 21%, the RSI is at 49, and stochastic is at 48. That's not necessarily the most ideal numbers, but they are in a position to be able to pay attention to them. A pound Aussie is at 19%. We're looking at the RSI 54 and the stochastic slow is 66. Both of those positions have kind of missed, or we basically missed those. There's really nothing that's at a position to where it's kind of aligned to where we could be able to take a trade. I don't necessarily trade euro pound, so I'm not going to end up recommending that one at this particular point. But we'll go back to take a look at what happened with the chart, and this is where we're at, and we'll talk about what ended up happening. Let's see. So essentially what ended up happening was that we ended up buying this off of this counter trend line break that we ended up talking about at the from that 2 hour spot. I ended up saying a couple things. One, if the market held support at this overall position and started to push up, then I would be interested in being able to buy when this market end up.
Truck?
Yeah, go get the truck.
What's the truck?
Not yet, baby.
What's the truck?
We'll go get it. We'll go get it in a second, okay? Huh? Everyone, give me a second. My co-host is telling me to slow down. There you go. Okay, so what ended up happening was I ended up buying at I think 72.30 when the market ended up pushing past that area, and subsequently at the early portions of the morning, it ended up getting up to 72.40 to 72.45 ish. From there, the market tried to pop back up to the upside, and then after that, fell down off a strong move towards its overall top. So what does that mean? If we zoom out and we talk about what ended up happening before, we were talking about the reason why I was kind of hesitant on being able to buy this was because this looked like it could be another resistance instead of being a breakout after we end up zooming back out. And subsequently, that's what we've seen. We've seen that the market has taken a little bit of a dive to the downside from that overall spot. Now, our stop loss is at 71.85, and I remain adamant in saying this, and this is the reason why I'm going to end up taking this is the reason why I might end up taking a short close, but probably going to end up being a little bit more patient just to see how everything works out. I end up saying that I did not want to take this position if this market end up falling below this overall area, or falling below this overall support. When I got into it, the market did not do that. The market held, which meant that it started to push up to the upside. Since then, and taking a look at it this morning, the market has fell down at that particular point, and we see that we end up having a retest, and now we look like we're having basically another fall at this particular point. Now, the stochastic is close to the buy zone, but that doesn't necessarily mean much of anything if we don't have any momentum. And right now, we see that the momentum is dropping below 19. And if the momentum doesn't go above 20, then that means that not enough people are getting in for being able to buy. Now, the other thing that is kind of bad about that is that if we look at when the New Zealand dollar and Australian dollar end up making this overall headway when it comes down to movement, it's typically from 9 p.m. Eastern Standard Time to right around 2 a.m. and then after that throughout the overall day. The reason being is because that's when that market typically opens. So I'm kind of paying attention. I want to see how this market is going to end up reacting to this. If this market breaks down, especially towards this area, and breaks below this overall spot right here, that will be a cause for being able to really close it. But at this particular point, as long as this market remains to be above and starts to push up, then after that, I will stay in at this particular point. I think I'm down. I think I'm only down $50 at this point, while my EA is basically doing a recovery session, which sucks. But anyway, go from there. But let's take a look at some other pairs real quick. Let's take a look at U.S. Swiss franc. We see that U.S. Swiss franc is making somewhat of a move. We haven't looked at U.S. Swiss franc in God knows when. And this market pushed up to 90. Go figure. So I'm going to go back to the weekly because it's been a while since I talked about this one. This is what I've seen. I've seen a wedge, and the market was basically moving towards the downside. I talked about how we talked about a long time ago that we wanted this market to see if it was going to fall down to a couple spots. We wanted to see if it was going to hold 89 cents, and if it held 89 cents, and after that, we was interested in being able to buy. Once again, that was weeks and weeks ago. At that particular point in time, it ended up having a breakout. Since then, the market has had a little bit of a retracement at this particular point. So the question is this a breakout and a retest, and then after that, a movement to the upside? Because the D extension has been hit. Sorry. With the D extension being hit at this particular point in time, the question would be, are we looking at a upside move? Now, we can do this two different ways. Let's see what's happening with this move right here. Currently, right now, we're in the second portion of the move. We had a 618 move towards the overall upside. Once again, this is the expectation that if we're looking at the U.S. dollar getting stronger, this would be a very good value position at being able to get in. The thing that I don't like about it, the market is not, the market right now is in the no trade zone, but it is at a sweet spot area on being able to get in. Sweet spot areas always get a lot more consideration than any other areas, no trade areas, anything else like that. So I do like that from that standpoint. What I will pay attention to if I'm looking at the 2 hours, seeing 2 hours in the buy zone. Currently, right now, it's not, and we're seeing more falling towards this overall spot, and we have not necessarily retested this overall spot towards the downside either. I will look and see if we can get some further downside movement. If this market could be able to fall down to, if this market today could end up falling down to a little bit right around that 88 area without hitting, without really pushing and breaking the overall fibs, then I think would be good. If it goes down to the 88 area, it goes to the 786 area, but still be above that overall trend, still be above that overall wedge, in which I think I'd be okay with. Right now, I'm just gonna end up sitting back and kind of waiting and seeing what's happening with that. Let's see what's happening with U.S. yen. Haven't looked at U.S. yen in a while. We end up talking about that overall push where the market end up going up to the buy zone. Since then, the market has retraced. We talked about this overall purple area from a weekly standpoint, saying that we're waiting for the retracement to be able to buy back up. It's the same thing that ended up happening with the U.S. Swiss franc. We wanted to be able to buy up to this overall spot first. That happened. Right now, the market is basically retracing in this overall zone, which is basically another fall area and another support area where buyers would end up getting in. We take a look at this from a daily perspective. The daily is the daily's moving from the sell zone. The weekly is in the sell zone. So we're getting close to seeing if this market is going to end up remaining to be overbought for a while, or if we're just going to end up having another fall. What I was waiting for is that to see if this market was going to move back down to this yellow area, and if we can see if this market falls back down to this overall support level, which is right here, 1410, somewhere around there, then I'd definitely be interested in being able to buy. I would probably put a pending buy at 104.25 and wait for that market to be able to hit at that particular point. The reason why I'm looking at 104.25 is because it's right above the overall support level, and it's at the start of a sweet spot level right here. So I am interested in that particular portion of being able to get in right around that area. So once that happens, if this does happen and falls down to this area, then after that, I'd definitely be interested in being able to buy all the way up to, it'll be 107. So it'll be about 300 pips from that overall movement with a risk, below, let's see, with a risk of 96. So we're talking about right around 300 for 1 to 300. I really do like that risk reward. I want to see the market kind of fall down a little bit more and go from there. So that'll kind of, if that happens, then you're talking about the U.S. Swiss franc happening at the same time. So both of those trades will probably end up being the two trades that I would kind of pay attention to going into today for us that. Let's take a look at the pound United States dollar as the last U.S. base pair. We had a counter trend line break to the overall upside. The market ended up hitting the extension at 138.50. If you got into that pair when we were talking about that, which was about 5 or 6 days ago, congratulations. I did not take a entry on that overall pair, and this that movement has already done happen. So I'm going to stay away from that one. All right, so that kind of brings us to the indices and taking a look at what's happening with those, and let's see if there's any type of movement that is even worth paying attention to. The market has been steadily climbing all the way up to the upside. We talked about being able to see if this market was going to move up to 130, I think it was 136.50 when we got into it the last time. Since then, the daily is in the sell zone. The 50-day moving average has still been holding as strong support and showing that the market is fully bullish. There's a D extension at 14,320 that we have to be able to pay attention to at this particular point in time. It's not there as of yet. Okay, so with that being said, the question would be, um, is there any type of trade to be able to get into? The only trade that I would look at this point in time would end up being buy trades, and with the market being in a no trade zone and and starting to fall down again, um, I would want the market to be able to fall down to a certain to fall down to this overall pink zone, and then after that, look at being able to be interested in buying from there. Other than that, I'm not interested in being able to make a trade unless you end up getting into it sometime last week. We can see that the ADX is above 20 and it's and it's bullish, but we can see that there's movement going against that, which doesn't make any sense. Um, I can see that. Okay, I can see a slight divergence. Pull up this, move this out the way. I can see a slight divergence right here on the 2 hour. We can see the market hit the sell zone right here, and then after that hit the sell zone right here, which means that the market should be falling, but the market has been pushing up and making higher highs. So we see lower lows right here from here to here, but higher highs from right here, from there to there. Actually, yep, from there to there. So there's a sale that's about to happen. And the question would be, once again, where is it going to fall down to? Naturally, it'll go down to an overall zone, probably 13,614 before actually moving up. That has been a little bit more intrigued than actually selling than buying at this particular point. We can see that the market kind of fell off right there off of the 15 minutes. So you would have caught it. You would have caught it a little bit earlier. You would have seen that movement. This is what I'm going to do. I'm going to look and see if I can be able to get a little bit of a high price. If I can get a high price, if I can get a little bit of a push of a high price, I might look at being able to scalp the market from here. I hedge it, but I'll look at being able to scalp the market from here, and then after that, look for the market to be able to sell off. The move has already done happen already, obviously, but that's only 30 points at this particular point. So I am interested in being able to sell for scalping. Not necessarily long-term movement, but I would look at being able to scalp to that overall zone. What I would look for is this. I'll go to the 15-minute timer, wait for the 15-minute timer to be able to get into the sell zone with a counter trend line break. We may end up getting that right at around 9 o'clock before 9:30 actually ends up hitting. If we get that, then after that, I'm interested in being able to sell. And we'll go from there. Hopefully that makes sense. The reason why I like that is because of divergence and just trying to see what's happening with that overall movement. I see divergence on the 2 hour. And the move has already started to happen, but I do like what I see. From that standpoint, we can see the 4 hours in the sell zone as well, and it's already start making a movement. That makes it a little bit more intriguing to be able to make a sale for as a scalp, not for the long-term trade. But if I was to get into this, my stop loss would be above the swing high. I'd probably put it at 13,786. Would be a very short stop. Be about 50 points for that overall movement. But I have to break below this overall. I have to break below that overall 10-day moving average. And if it doesn't go below that 10-day moving average, then after that, it's really not a move point because it's just going to bounce right back up. Okay, so done with that one. US 30. Are we saying the same thing on US 30? Yes, we are. From a 2 hour perspective. Look at it. Market is hovered around the sell zone. Market went into the sell zone again. We're seeing higher highs, but the market is basically in the sell zone right there. 2 hour is in the sell zone at this particular, just crossed over in this particular position. There's going to be a fall that's going to happen at some point in time. Question is, should we be looking at selling at this particular point? And will we get burnt for trying to sell at this particular point? Let's go to the daily. We see momentum. Momentum is towards the upside. It just went below 20, and we're basically in the sell zone at this particular point. it makes it kind of hard to be able to look at this and treat this seriously as a sale when it breaks a new high. When the market breaks a new high, then that means that there's more momentum to the upside. I don't care about divergence from that particular point. We're looking at price action. Price action has broken a new high, which means that it's going to end up moving up a little bit higher. I'm gonna stay away from that one. I'm gonna pass on that one. I know that the market is in the sell zone. I can see that. You can see it up here, but I'm gonna stay away from that one. I'm not gonna waste any money on losing on something that is expected to go up. So I just wait for the low price. If we can get a low price, and after that, I look at buying and going from there. But that's pretty much it for today. If you like what we end up doing, obviously, you can do two things for me and really help me out. Please make sure that you go to the Carter Cow Capital business page and be able to drop in a like, drop in a comment, be able to go from there. If you're interested in being able to hop into any one of our webinars that we're going to end up having this week, you can go to cartercowcapital.com/start here. Once you end up going to that website, all you have to do is just plug in your information. I'm going to sign up for our upcoming Fibonacci Fundamentals class, be able to hop in from there. Literally what you end up doing is getting an email. You'll get a copy of our book when it comes down to being able to help you, being able to learn how to be able to get started trading, and that'll get you started with, or get you on a fast track to be able to go into our boot camp, which is going to end up being February 22nd to February 26th. If you're interested in being able to hop in about that, please don't hesitate in being able to send me a message or anything else like that. Like always, plan your trade your plan. Everyone, y'all end up having a good one. We keep our eyes out on New Zealand dollar, United States dollar. Hopefully it can be able to turn around for us. If it doesn't, then we'll take a quick little short loss, and we'll see what happens with the indices pairs. I think that the market's going to fall down this morning, but I think it's going to be a short-lived fall, and we'll end up going from there. Take it easy.